Good morning and welcome back to another pipeline trading video. So we have a lot to cover today. Around these moments, I'm not going to be making too much content in the sense of I don't want to bore you to death if things aren't really changing. A lot of what we're seeing is the same stuff, but I'm going to cover some things that I've been keeping a really close eye on. One of them was the 30-year. They just actually raised money and sold bonds. And the government had a pretty difficult time and the rates had to go up. So if you look on the 30-year, we're at 5.07. On a 10-year, we're at 4.5. So that's not good. And we broke structure. This looks like if we're going to hold down here, that we have a potential of going up. And I don't know if anybody caught it, but the other day they were talking in government about how they could see rates going up, not down. And if that were to happen, that would not be good, because this Fed chair coming in is anticipating that AI is going to fix the debt issue. It's going to allow growth domestic product to go up and increase in the economy and fix the issues that they have. But the one thing is there's way too much debt. I don't think it's fixable. And if you look at fiat currency and the history of it, I think this is the second Federal Reserve we've had. And if you go back and read, every fiat currency system throughout history has an end day and an end time. And right now, we don't know when that's going to be, but right now it's looking crazy, because if I go to the market right now, we're going up. What you want to be watching for, and what I'm watching for right now, again, this isn't financial advice, this is just educational. You're looking at the volume. So we've been steadily going up and volume has steadily gone down. Now, why is that important? If you see these small sell-offs and buying and all this stuff, you're having smart money distribute out at these levels. So they're selling, and then it gets bought back up slowly with retail. And that includes probably some fund managers, because they're all not smart. But this is actually starting to look a lot like what we saw in 07, 99. And if you go and study those charts, you'll see exactly what I'm talking about. Look at how, and it doesn't mean that it can't go higher, but you're seeing the volume dwindle away. And that's a sign. The housing index is starting to roll over. That usually is a forward leading indicator for what's to come. And again, that happened in 07 or 05. Right? And what's crazy is look how long it took. The markers were on the wall from 05. It wasn't until 2007 that everything rolled over. So the whole saying that the markets can be irrational longer than you could be insolvent is right there. That's the proof, case in point. And the semiconductors, they're dying off. Can we go up? Sure. But now that you're starting to see these pullbacks, and it hit the target I was talking about, it came back down to 529, and it held the 20-day, which is still healthy, which means we could still continue to see some upside. But oil right now, a lot of this rally that's happening is because oil's rolling over. And if these cross, we could see oil come down to about $82. If it breaks out of this wedge, right now this is a key level because this is where all the volume is. If we were to break, let me see the number, $95.94 per barrel. If we break that level, there's a good possibility we're going to come down and touch 77.59. If we break that, we could come all the way down here if we break this level right here. So how that would look is very simple. So the possibility of things escalating, where oil will go if it breaks out of this bull flag. Okay. That's it right there. On the downside, so you're going to have two scenarios that you're watching. On the downside, it's going to look something like this. Let me see if I can, where is it? Right here. You could see this. Comes down, goes back to the 50, rejects the 50, and then comes down here. If we go down lower, it'll do potentially something like this, come back to test the 200-day, and then make its way here. What's interesting is I never even thought of it because I didn't put the numbers on it, but you could see this could be a 5-way to the downside. And it doesn't go down in one straight shot. This is just by fluke what I did, because typically you're going to see it break and it should come touch this level, because this is key. We have a lot of volume up here at 95.74. But if it does this, it's going to go and retest. Or the other possible, and I'll go over this, like it could just flush right down to the 200-day, then go back up, right? So what I'm drawing is just an idea of what possibly can happen. And you don't need to, you would never want to short this here. Where you'd want to short it is if we go back up here and we don't break up. Then if it rejects the 50, you would put your short at 95.54, right? You could do that now if you're in the camp and do a tight stop. But for me, there's no confirmation, because if we hold the 50, we could go back up, right? That is a possibility. And anybody says that it's not is lying to you. Nobody knows. Nobody knows. So wait for the confirmation, see if it breaks the 50, goes back up and holds the 50 as resistance. Look, we broke the 50, and then literally 2 days later, we're back above the 50 and we had this run. So you wouldn't want to do that. You'd want to see a touch, a rejection, and then put your short if that's how you want to play it. Gold also looks like it's rolling over. And again, we don't know how low gold will go. Typically with this, you can say that this is an A, B, and C, and now we're in wave 1, and then this is 2. So just looking at this, right, we're below, everything is bearish. But if we hold this level, that's a really, really strong level, 44.93 on gold. Can we come back down here? Yes. Can we come back down here? Yes. It would all still be valid. We can even come down here and touch, right? But this right here, descending, shows that there is more upside if we break out of this descending wedge. Bitcoin. Now, this one's going to be tricky, because this is the thing with Bitcoin that a lot of people don't recognize is they're going based off of the news and everything else. We just got the best news for the, I guess you would call it, blockchain industry. So that includes all tier 1, tier 2, tier 3 cryptos. With their use cases, you have Oracle, you have some of the biggest companies that are tied to like Chainlink and things like that are doing some great things. Same with XRP. They actually are, I think XRP, I read something that he said, Brad Garlinghouse, in the next 5 years, that they're going to have 15% of all SWIFT transactions on their blockchain. So that's a lot of money going over. What it will do for XRP, I have no idea. I don't really understand the pricing that people are talking about for, because I've heard some insane numbers that just they don't make sense to me. So one of the things I want you to keep an eye on is, are we going to get back above the 50? And if we do not get it back above the 50, remember how fast this flushed, right? It looks like, oh, it's going to hold support, and then boom, we're below the 200-day. When these things drop, if the market does decide to take a little bit of a breather and pull back hard based off of some news, mark my words, the first stop is 67,871. So to me, With the way this is acting, can we get a push back up to 84? I highly doubt it. I think we could get a push back to 79. Yeah, I would even call it a flat even 80,000, because 80,000's a more psychological number. So I think we could potentially wick to the, $80,000 before making our next leg down. That's what I'm watching for, because this is still bearish. And I think this is going to get a lot of people by surprise, because they're thinking, well, the S&P and the Nasdaq are at all-time new highs. Bitcoin and Ethereum and all these other ones are also going to go make all-time new highs. I don't think that's going to happen. And if you remember, when the market was plummeting last year, that's when Bitcoin and ETH went for a run. So they kind of are rotating indicators, I guess you could say. Now, ETH is looking like the same. I'm going to tell you how I'm playing this one, because this to me is screaming downside. Screaming. We broke out of the bear flag. Okay. Typically, what would happen in an event like this, and it doesn't mean it has to happen, but it might happen, because there's a lot of people with shorts. This right here is a micro bear flag. You see how we're going up? So what I was watching for is for us to potentially go to 2165, which would be the 10-day moving average on the daily, and that get rejected down into this area. Or first stop should be 2063. That's what I'm watching for. But this right here, unless we curl and take all this out and get back up here, hate to be the bearer of bad news, but ETH is coming down, and it looks like it's going to lead Bitcoin, right? Look at this. This is just, I mean, and don't get me wrong, some would argue that this area right here is as low as it's going to go. I've just seen too much from the past to know when everybody thinks that this is as low as it's going to go, it flushes out lower. You may not get filled and you put your orders in, because it does happen really fast. I don't know if you remember with Bitcoin, when it dropped to 15,000, it closed back at 20,000 in less than a minute, right? It was a huge wick down. Unless you had orders in and you're on you have a good brokerage, you're not getting filled on any of that. The slippage is huge. So how I'm playing this, I said in the video before that I was going to cover my short. So I cover my short. I'm long now on BMNR. And right about here, 2031 area, what I'm looking for, just like I said with ETH, is a retest of this zone, or this fair value gap right here, 2225. So that should give BMNR a decent run up. And you saw a lot, like you could see right here, when this is going up, look at the volume. So that's why I say watch the volume. Volume increased drastically, massive spike. Everything is up, so that's good. Do I think it's going to be long? No, we just broke out of this wedge. So that's what I was watching for, was this wedge right here. The moment we broke, I bought long yesterday, right on this candle. So I have a stop right below here, and we'll see if it plays out. If it doesn't, I have very minimal at risk. I have about a 4-to-1 ratio for win rate on, what is it? They call it I don't know all the terminology. So basically if I'm risking 10 cents, I'm making 40 cents, right? So it's a 4-to-1. Hive is also smashing. So I didn't think it was going to go this big this fast, which is great. So this is another one that I'm watching. I wrote it down. So let me just give you, this is huge, because this actually happens really fast. And then when it comes down and it stops, it comes down really fast and there's no stopping it. So I do believe that we could get a spike up to $6.14. If you remember, I was calling it over here. I said this area, if we hold the 50, go back and check my videos. Said if we hold this area as support, this is going to make its run up. And boy, did it make its run up. Now, the thing that's a little worrisome for me, thinking that this is dying off, is because of the volume. So we'll see what today is. But if we get a bigger drop down because there's a gap, I want to see the 310 level. I want to see how this acts around this zone here. I mean, we may not even get there, but we might get to the top part, 307, which remember I was saying when you break through a ceiling, that ceiling then becomes the floor. So what I would be watching is this, very simple, okay? A pullback to here, and then a break, pull back to here, and then there. Right? Now, how high can it go? No idea. No idea, but I know that they're doing some pretty big things. They have the government backing them with the data center near the University of Toronto. And I mean, yeah, the company is trying to do some pretty big things in AI and data centers and renewable energy in Sweden and Paraguay and a few other places. So could this go and have a run all the way up to here? Yeah. But this, for quite some time, this level at 685 has been a huge, huge resistance. And maybe it will be different because we broke character. So if we break character, I would be watching this level. If we broke above here for a retrace to about 664, and then I would say yes. But it all depends on how it does at this area right here, because there's an order block. So keep an eye out for that. And there's a gap fill, right? So typically these gaps get filled and we might overshoot and get filled at 530. So that's how I would be looking to play this one, is keep an eye on this. Could have a good run up here. It's a decent return. Yeah, I mean, it had a really good run. So like I was saying here, you can see that the moment, I'm going to try and zoom in more. So right now, there's a good chance that this is going to come back down to the level I was saying, just based off of the volume bar. And we even might get a bigger retracement to here before making another leg. As long as we don't lose and go below 273, you should be good, right? So keep an eye on that. You don't want to make a lower low. You want to continue to make higher lows, right? Because if that happens and then we go back up, and not to say that it can't go higher, typically what would happen is, unless it fakes everybody out, you would basically be looking at this. If this were to come back and go below here, you would have to see a new high. If it stalled out around here, then I would say it's a trend reversal and it's done. It's not going to go up. And it would have to, basically take a pretty good break for it to then make a big move, because you could see there's a lot of gaps, and that's fine and that's normal, because you could see there's gaps all the way here, right? So just knowing the way this is and seeing it play out, this was a great buy. Anybody who bought at 177 area, and that's a shout out to AM. Those are the first two letters of his initials, or his initials. But AM, someone I know, bought around this, and he's pretty happy right now. And a shout out to SC. And no, that is not who you think it is, if you know who I am. But SC has been watching the videos and looking to get into the markets and learning a lot. So I think he's going to be set for some success. And Intel is another one that I'm watching because, like I said, I want to see how this does. Yeah, see, it didn't make a new high. Volumes kind of, I mean, yesterday was garbage, which is interesting. So this might be primed for a. Did we hit my target? No. We almost did. We almost hit it. It was still a good short call, but way too early on my end. So that would have been, I covered my short over here thinking we were going to get a bounce up. And if I would have let it play out, that would have been a really, really good trade because that expired in June of this summer. Yeah. So June 18th, it expired. So I had plenty of time. That would have been $8 in the money. I should have made a lot of money on that one, but I took the loss. I wasn't sure, and that's fine. The rule is if you are not comfortable with the position that you have or you're questioning it, close it. Why, literally give yourself the brain damage of sitting there watching, worrying, okay, how's it going to open the next day? If that's how you're thinking, which I was starting to get like that, and I was like, no, this isn't good. This isn't part of my plan. Close the position, take the loss. So I would watch for this to fade out, go to the lower time frame. So you're seeing right here, we're going to probably get a spike up, right? If we do not go and make a new high and we only get to about 128 and we don't break above, because you can see right here, it's funny. If I were to tell you what I was looking at 5 years ago compared to what I see on a daily today, it's day and night on how fast you could spot this stuff today. That's why the more, I think like an athlete. What they're doing when they're not playing or practicing is they're watching film. Watch the tape. See, okay, how is it moving? Whatever your strategy is, back test it. See what it plays out like. So right now you saw this wedge, and because I'm doing it because it's I would be looking from this area to here, right? That would be the flag because this was a bear. Well, let me zoom in so you can see this. So you can see bull flag, bull flag, bull flag, right? This is a longer bull flag, but we're breaking above it. So you see this part right here, the flagpole, take it, put it here. So this is showing we should get a measured move of close to 133, right? Now, it all depends though on how it acts at this level. If we do not go and make a new high and it stops around here or here, then that's where I would be looking to enter my short. I would watch the lower time frames for execution. But those are the levels. Don't try, learn from my mistake. The best insight I can give you is there is scalping opportunities here and there, but you want to make sure that when you're looking at putting on some trades like this, that they're at key levels. Know the levels that you're good at. Know the levels where the stock reacted to certain things. If you're just going based off of the 10 crossing the 20 and the price of below the 50, that only works if you're a day trader. And most people are not day traders, they're more investors or swing trading. So this is just to give you an idea before you're looking right now saying, oh, Intel pulled back and it's going to go and fly and this is a time, because a lot of people think like that don't know this. They're thinking right now, I'm going to go all in because Intel is going to go to 200 or whatever number they have in their head that they made up. No one knows where Intel is going to go. It's already overvalued. They're pricing in things that are absolutely insane. And look, you could see they took a 9.9% stake, the US government, right? Great call for them. But they're saying now, oh, it's going to have a 130 to 140 price tag. Okay. That's not that much considering how much downside there is. There's way more downside with one bad piece of news, and this thing's gone. Tesla, that hit the target. It's reacting like I said. If you go back to the other video, I said if we hold the 50, we hold this level, there is a good chance that we're going to get a bounce back up to here. Whether it makes a new high or not, that's a different story. But right now, this is bullish. This is bullish because it, and again, I don't know if I would be buying right here. I would be looking at the lower time frame, seeing how it acts, because volume has started to pick up a bit on the selling, right? Yeah, it would. No, I take that back. I take that back. I would put a tight stop, whatever you're comfortable with around here, because this could be. Yeah, see, I wouldn't be too enthusiastic to go long on this. How I would look to play this, and don't get me wrong, this can actually go right through here, like that, and then roll over. But at the same time, what you want to be watching for is it could be doing this as well. A, B, C. I would have been more, what's the word? I mean, there are exceptions. So this would have been wave 1, wave 2, wave 3, wave 4, wave 5. That's what I first said, right? The only thing is we came back into the level of wave 1, which is typically a no-no. There are some exceptions. So that's why I'm saying I would go long or consider going long based off of that analysis right there. 1, 2, 3, 4, 5. But I don't know if it would, I don't think it would actually go up here. There is a possibility that it could, right? But I would be betting on my probability would be that it would go around here. I don't, and you'd have to see if it takes out this order book right here. If it took out the order book, sure, great. But time will tell, right? So keep a good eye on that. That could be a play either to the downside. If you do see that, then I would be looking to either potentially put a short here or put a short here. The thing that I didn't like about this part here is it made its measure move almost to the T and it's sold off. So another rule is the more that you go and hit an order book, so they hit 1, 2, 3, 4, 5. If we go hit it again, that could be the one that breaks it, right? The more times you hit it, the greater the chances of it breaking through. That's a rule to keep in mind. Meta still looks like nothing to me, not really paying much attention. Google, Google is dying off with the buying. So I would be watching, I'm going to be watching this for a short. I'm going to see how this plays out. And if we lose the 380 level on Google and then come here and then go back and get rejected, I will be looking to put a short. Because I think all these gaps will eventually get filled. Or, I mean, even this candle right here would have been a good short. You had the doji saying there's a reversal coming. You could have played a tight stop. And ultimately, I think it could come back down to this level for sure, right? Where we broke the structure and then see if we're going to hold this area. But when I look at this, this is just screaming short. It's so overbought. Not that I think Google's not going to be around and it's great. I think it's huge. Like they're talking a 15, they're going to be putting, see, the thing is they're going to be putting a lot of money to work, right? But that takes time. It takes time. And then any disruptions or anything that's going on that they haven't planned or foreseen coming up is going to be an issue on their valuation. So that's another thing with the market being as hot as it's been. Could we go up? Yeah, we could. We could go to 400, right? Back to the 400 level. I don't know what they're forecasting. I bet you some people probably have a $500 price tag on this thing. I just don't see it right now. I shouldn't say I don't see it right now. I actually could see it going a lot higher with the stupidity in the market right now. And this is what blow off tops typically look like. They don't make any sense and they rip up and up and up and up, and people just keep barreling in because they think it's never going to end. And that's why I said go look up all the other bubbles that happen. And I'm not saying that we're in an AI bubble. What I'm saying is there's 7 companies that are holding up the entire market. 7. So that's it for today, guys. I hope you found this video helpful. And if you did, please support the channel, subscribe, hit the bell notifications, comment below, definitely hit a like. And like I always say, stay disciplined, trade with intention, and God bless you all. Make it a great day.